After a quiet start to the week, tensions in the markets have resurfaced again. In the light of a mixed macroeconomic data, the focus is shifting to statements by policymakers from the world's major central banks. The hostilities in the Middle East also play a role in a market sentiment. Importantly, the annual symposium will be held in Jackson Hole from August 22 to 24, where leading financiers from global central banks will make their statements. Considering that the key speeches are scheduled for Friday, the scale of volatility by this time is difficult to predict with accuracy. The first thing investors need is more clarity on the Fed's rate cut, but the Fed's agenda is still obscure. For example, San Francisco Fed Reserve Bank President Mary Daly said yesterday that the time to begin fine-tuning monetary policy has already come. Her colleague Austan Goolsbee from Chicago, on the contrary, noted that economic indicators in the United States are giving alarming signals. Meanwhile, Goldman Sachs analysts lowered their estimate of the recession scenario in the United States in the next 12 months from 25 to 20%. So, the speech of Fed Reserve Chairman Jerome Powell on Friday should, in theory, provide some clues regarding plans to lower the funds rate. Markets are also interested in the size of the rate cut, 25 or 50 basis points in September. By the way, avid speculations on this issue may force the Fed Reserve Chair to refrain from the too aggressive forecasts. After all, a jumbo rate cut could also signal a Fed policy mistake and higher recession risks. In the meantime, Wall Street benchmark indexes closed on a Monday with a strong growth. The leading S&P 500 index also started higher today, moving within an intraday corridor of 5,550 to 5,608 points. After declining for two sessions straight, the US dollar index was pinned on early Tuesday at its lowest level in 7 months, in the range of 101.70 to 102.10. Moreover, the index tested the area around 101.82 today. Overall, the US dollar index dropped by more than 2% in August and has been trading in the red for the second month in a row. By the way, on a Friday, it may come under extra pressure from the yen. It accounts for almost 14% of the US dollar basket. The speech of the Bank of Japan governor in the parliament may launch a new rally in the yen and thereby put a strain on the US dollar. This will certainly happen if Governor Katsueda sticks to his recent hawkish tone. In the meantime, the ailing US dollar is helping to strengthen the euro. Today, the euro-dollar pair with inertial growth crossed another critical level of 1.1050, and this means that the psychological level of 1.10 has lost its importance to buyers. Today, the euro-dollar pair has challenged 1.1088, the highest level since December 28 last year. All in all, the euro has rallied by 2.4% this month. More gains are yet to come. Technical analysis indicates that price settlement above 1.1050 on a daily chart signals growing bullish momentum. In the future, this movement could lead to a challenge of the high set in July 2023. However, traders should not ignore the fact that the euro is now overbought. According to our analysts, the rapid rally could be interrupted by a pullback and regrouping of trading forces. Oddly enough, oil prices are also falling for the second session in a row, although the main catalyst for growth, a weak dollar and the possible disruptions in supplies are valid. Nevertheless, Brent is trading today below the critical level in an intraday corridor of $76.5 to $77.80 per barrel. Most likely, the market listened to the words of the U.S. Secretary of State Antony Blinken, who announced on a Monday a possible settlement of tensions between Israel and Hamas. In addition, investors voiced concerns about the demand of the world's largest oil consumer. China's economy has been losing steam, unemployment is rising, and the consumer prices in the country are sliding. So, analysts underscore all the conditions for deflation and recession in China's economy. In this context, the demand will remain sluggish. Hence, the oil market is trading under selling pressure and the crude oil is trading lower. If the bearish momentum escalates, Brent will fall towards $75 per barrel, the local low recorded at the beginning of August. Gold can boast record highs today, trading in an intraday corridor between $2,535 and $2,563 per ounce. Investors are opting for the safe haven asset while awaiting more specifics from the Fed Reserve regarding further policy decisions. On the back of falling oil prices, the ruble lost its footing as expected. So did its exchange rate relative to the Chinese yuan. Consumer inflation in Russia is expected to decline from 14 to 12% on a year. We can assume further weakening of the ruble. In the meantime, the dollar-ruble pair is consolidating along 86. From the point of a technical analysis, this is a positive signal for buyers. However, traders should not disregard one important point. For the border increase in long positions, the instrument has to settle above 90 in the daily time frame. Otherwise, the dollar-ruble pair will get stuck in a range of 86 for a while. You have watched the market review on the InstaForex TV channel. We wish you profitable trading and see you soon. Gold has just conquered a new all-time peak. Amid the soft US dollar, the precious metal is now the best friend of the girls and investors.